I think Peloton's a $35 billion company, which means that Peloton is the value of the whole fitness industry combined. Whatever. Peloton.
Well, I'm here with Andrew Left, who I'm pretty much going to call the godfather of activist short selling. I know he wasn't the very first, but I think when you look at, I mean, you were probably the second and the only one continuously going. I met you 10 years ago, right after I started this, and was really wet behind the ears, and knowing you helped disabuse me of a lot of notions as to how the world should work here. So yeah, it's great to have you in the chair, man. Really appreciate it. And I grabbed my beer. Great suggestion. Thanks for being here.
Nice seeing you, Carson. And I guess I'm not the godfather, but I'm the guy who took all the lawsuits in the beginning. So after doing this for years, like, can you do that? You can actually write about companies, and other people were doing it and running away from it. But I was actually said, okay, if you want to sue me, let's do it. And then once this precedent was set that a company just can't sue someone and shut them up, everything progressed from there.
What's really interesting about that, though, so yes, you had this great precedent where under California's anti-SLAPP statute, this one asshole company suit was dismissed. Problem is, like when I get sued in California, we're not allowed to cite it actually because it was an unpublished decision. That's apparently against the rules of civil procedure to cite your case. So every time that happens, I get stuck with gradient analytics shit precedent, which was Herb Greenberg and Mark Cohodes. So I have a hard time getting stuff dismissed under.
I mean, the whole thing sucks. I think they stopped suing, though. I mean, really, for a while, like the sue was the big scare. But I think that sue is gone, except if you do it in, me and Hong Kong don't get along so well. They sued me, and I for some crazy reason, should have just said I'm sorry and paid the money, decided to fight it without realizing I was at a kangaroo court the whole time. So, whatever.
I remember, I think it was right after I got hit with the suit from Olam, so I guess 2012. You and I sat down in LA and I was bitching about it, and you told me how much money you had made as a defendant in these lawsuits. So, I guess since they went away, that's a little bit of a revenue stream you lost, or...
The people who sue you are the worst. And I think that's starting to get... It's not in the shareholders' best interest to sue a short seller. Unless something the short seller does is really egregious. So that's why they pretty much have gone away.
Well, it's interesting, though, because I'd say, not in your case, obviously, but when I look at other short sellers, I feel like they're getting sued more often. I feel like the business media, financial media is getting threatened with lawsuits more often for having guys like us quoted. Or
That's true. That's true. Listen, the system is whacked, and we all know that. And to show it's whacked, I always tell people one clear example. Why did it take so long to catch Bernie Madoff? Because no one was financially incentivized to do so. I said, because if I could have shorted Bernie Madoff, I would have put that bastard in the back of my trunk 20 years ago and figured it out. But no one was financially incentivized. So that's where fraud comes about, or bad players. So why would you regulate short selling or even valuations? It's ridiculous. And yes, the networks, when you go on and you poo-poo a stock, they act as if you're anti-American, you're anti-capitalism. It makes no sense. More importantly, if the stock's at 50 and you say the stock's going to 20, and that day the stock goes down to 45, they go, oh, I thought it was going to 20. It doesn't mean today. It means if all these things happen that I write about, in a proper functioning market, the stock's going to 20. Obviously, it's just a bias against short selling.
Well, that's one of the things that's really interesting. When I look at the arc of your career, one of the things that's clear is that you've consistently been adapting. And one of the ways you've adapted is you've also started doing, I wouldn't call it long side activism because you're not calling on companies to make changes, but you're also doing public longs.
Yeah, no doubt.
When's the first time you did that? And
the first time I did it, actually, if I tell you, it also will tell you how freaking old I am. Is I was short Intermix, which owned a company called MySpace, and I was short. I'm like, it seems so stupid to me that they'll never have a model behind it. And then one day I went to the Apple store in Century City in LA, and I saw every single kid was on their MySpace account. I spoke to a few people, and they're like, you can't stand in the middle of this. It's like a phenomenon. I didn't realize there's teenagers getting laid on the internet. I had no idea. What's the price of that? And I'm like, I'm short this thing? Oh my God. I mean, every kid at the Apple store is on a computer on their MySpace. Every kid. And I'm short. So I went back the next day, I called my broker, I covered every share, and I actually bought whatever I was short, I went long. And then I said, hey, look, mea culpa. I mean, look at this thing. And I swear to you, the stock got bought out within a week. How crazy is that? If it didn't get bought out, I think I bought it for like 12 a share, I think. It would have gone to 40, 50.
And that's when Rupert Murdoch bought
Yeah.
MySpace, or
Yeah, Rupert Murdoch. But imagine this. In a world today where I hear like Roblox is going to go public for like $8 billion. And what's DoorDash? 45 billion? 50 billion? At the time, MySpace was the largest social network. It was the biggest and the largest. And I think it sold for 600 million.
I mean, one of the other things, when you look at over the past 10 years that I've been doing this and that I've known you, I mean, it was a pretty big deal back then when, you shorted or I shorted a company with a market cap of $1 billion or more. I mean, It's like there's so many completely fucked up companies now that have multi-billion-dollar market caps.
It's amazing. $1 billion means nothing anymore, right? I think I used to write, and they go, it's only 600 million. And I would tell them, this was sports franchises were like 400 million. I mean, take a sports franchise, throw in 2 yachts, then throw in a Picasso. Is it worth this piece of shit company that'll never, do anything? We just put an amazing value. And obviously, this is before the world got ETF'd away. So now I look at companies. I mean, I see companies every day that are 600-700 million. It's so hard to short them. I know. I don't make the rules. I just play by them.
The other thing that's also really interesting, and somebody said to me the other day, and I hadn't really stopped to think about this before, but as these market caps have just skyrocketed, I mean, the amount of money these guys are making now for their scams and their promotions and their frauds, I mean, this money is off the fucking rails. Like, I mean, the numbers are mind-boggling. Do you ever stop and think about how much money these guys are pulling down now?
I mean, when you say scams and frauds, it's not as much. I'll give you an example. So I was short for a while Wayfair. I'm not short Wayfair anymore for no other reason. And I know they do big revenue. They just started to make a little bit of money. But the guy delayed profitability forever. But he had a 10b5 trading plan in that allowed him. This company was losing money, and you never thought you could make an argument that if COVID didn't happen, they could have gone bankrupt. The stock was like $40, right when COVID hit. They were really losing a lot of money. But the guy had a 10b5 trading plan, and I think he's making $60 million a year. Really crazy number. I mean, if somebody makes money on making an amazing company, they should, right? I don't begrudge them at all. But if you're missing your Wall Street estimates all the time, all you do is miss estimates, and you just put in a big 10b5 trading plan, and that's really the way they do it. Rarely do I see like a secondary with selling shareholders on a scam. But I don't know. Like right now, I'm short. I was short. I'm not short anymore. That's INOVIO. I call it Pinocchio because it seems like they lie a lot. I'm not short INOVIO anymore because if they lie a lot in the vaccine business, who knows what they could say tomorrow morning.
I mean, every time there's a new disease, right? Like INOVIO's got a new cure in the works.
For like 20 years now. But
yeah, exactly.
The CEO hasn't sold $40 million worth of stock, but they raised money. So I think they raise money and they just buy themselves a lifestyle. Maybe, they buy a plane and meals and travel and some expense accounts here and there. I don't think the guy can necessarily go out there personally and sell $50 million worth of stock.
Yeah, I mean, but then again, you could get these guys can pledge shares and get great loans on these things. I mean,
100%. 100%, no doubt.
Yeah, I mean, that's like the big, the really big, or the coup de grace scam on top of all this shit is pledging stock for loans. But INOVIO's, it's been a frustrating one, man. I mean, we've been short that one as well. It's clear they are not going to be anywhere near anybody's arm with the COVID inoculation, but I don't know. Like, it's still $10 stock. So, whatever.
$10, it's $2.5 billion. That's worth zero.
Exactly. Nah, it's insane shit. I mean, especially in biotech. But I guess when you look at this year, I mean, if you can rewind to March, and it seemed, at least to me, like the world's falling apart. I mean, did you expect this year to turn out the way that it has?
Okay, so it goes like this. We've had a good year this year. Citron's had a very good year. Maybe by the time this comes out, our numbers will be out. So I'm very happy. But I had it around June on. Once I realized you could think your way through this market, I was all messed up. It actually says a lot about humanity. It says a lot about people. That we didn't, as in March, when everyone said the world's over, this is terrible, everyone's going to forfeit on their mortgages, and look what happens. We really adapted as people. We just reshifted the economy. And bad businesses went out. And unfortunately, the people who are hurt are the people who are not public. The small businesses are the ones who got most hurt, right? But we can't trade the small businesses. The publicly traded stocks are the ones with the good balance sheets. They succeed. And once you got that, you start thinking your way around, and you saw the government put the money in the markets, there was a big shift, and you could start investing on the long side and make some money. Where me and you, Carson, got fucked up on is obviously there's a short GSX, which we know is a fraud, and no doubt it's a fraud. Everything about it, without even getting too technical, everyone knows it's a fraud. No idea who's on the other side of this. And it got to become like a, I don't even know, $25 billion company, some stupid number.
33 at peak.
Okay, how about this? You ready?
Bigger than Wirecard's peak market cap.
How about this? Last November, talk about selling shareholders. Last November, they sold stock selling shareholders at $14 a share, okay, for GSX. It's 12 months later, and the stock, or 8 months later, the stock's 130. They sold at 14. And what phenomenon took that higher? I have no idea. You know, fuck Andrew Day, I guess. And then another one, we both were short, this Nanox, which is another scam. I think it's, what is it, what's that, Carson, a $2 billion company now?
Yeah, it's a little north of 2. It was 3.
And they said they put $7 million. They put $7 million in R&D, $7 million, and they've revolutionized all of X-ray business without ever having a product. The whole thing is so stupid. You know, my 10-year-old can tell you it's stupid, but they did a stock promotion. I think they did a stock promotion there, Carson, there in Korea. And they got some Koreans, because I got too much email from Korea on this thing. They got Koreans to buy it. It taught me a lot about being a short seller. It taught me a lot about being an investor. What I underestimated was the size of the retail investor. People who are sitting at home with no sports on TV, and Robinhood became the new DraftKings, you know, and people just retail gobbled up stocks. I underestimated that phenomenon as much. But other than that, you know, I bought a lot of Amazon, and, you know, I was short some names and bought other names. I'm trying to think my way around the markets. But just to be a pure out short, it's been terrible.
It's actually kind of funny because in some ways we had a year opposite the year you had. So in the end of February, I'm very, you know, even to this point, like COVID conscious. So at the end of February, I was like, okay, the market doesn't get this shit. You know, it's, I mean, everybody's just been too anesthetized to risk for, you know, for all these years by low interest rates. Like, this shit's going to be bad. So we didn't publish anything in March, and we just shorted a bunch of things that, you know, like going around the world for years had never really made the cut for activism, just because they weren't, you know, quite there. But I mean, they were fucked up companies. So we shorted them. And yeah, we made like all this money. The end of May, you know, things were still really good. But by the time August came around, or August had ended, I was just like, man, we were the last people in the market to get the memo that when the Fed wants to pump this shit up, it gets pumped up. I was half joking, I think in April or May, that we should take the rest of the year off. And new rule, like next time I make that joke, it's not a joke. So, I mean, we fucking fought hard to try to get back to somewhere near where we were halfway through the year. So it's been, yeah.
You know, for me, I don't think it's funny. Just understanding, especially as a short seller, playing the short side of the market, you have to really be humble. And you have to understand the fact that, you know, you can be right and wrong at the same time. My investors don't pay me to be right. My investors pay me to make money. I'm not a professor. I'm not supposed to have some erudite answer about how the Fed and the effects on the monetary flow. Make money. That's my directive for my investors. So by doing that right now, I go, okay, you know, what's easy money, what's tough money? When the market started to come back, what's stay at home now? I'll give you an example. I was at home and I have a SONOS, and I love my SONOS, and I'm like, God, this is great. Really helps solve the whole home audio visual. And the stock was kind of stuck in the mud. I'm like, wow, this definitely has to be a stay-at-home play. Everyone's watching TV at home. I mean, everything about it. I started observing more, right? I'm like, people are watching Netflix, and and now no one goes to the movie theater, and SONOS introduced a new product, and it was getting great reviews, and I loaded up at the stock at $12. It's $24 right now, so that's a double, and that's just a name that people weren't looking at. I was short some Peloton. I got my ass handed to me. Then I bought some Nautilus at $9. The stock went to
the Peloton girl even talk some shit to you. So that's
right. That's cute, right?
yeah, that's actually pretty.
So stupid.
That's
I know.
Cool.
Whatever. Peloton. I admit I reshorted Peloton today. Apple has come up with their whole new fitness on them for like $20 a month on your phone. If you go do the update, CNBC had an article about it today. The classes, yoga, everything else are going right after Peloton. Apple is. And it's not going to destroy Peloton, but it definitely should take down this halo effect they have with this multiple. I think Peloton's a $35 billion company, which means that Peloton is the value of the whole fitness industry combined. More.
One of the things that really surprised me as I've come to know you over the years is that you're a very serious observer of trends. It's not something like that I do. I mean, I tend to get just really company by company. But I know you go to CES, or at least you used to go to CES every year, and you told me about Vegas. You said, look, man, Vegas is great because you see all walks of life here, and you can hang back and just observe and learn and see the trends. And that's something that I think, I don't know if it's really appreciated by people in the market about you, but
you keep your eyes open. I was on CNBC, and Snapchat was like $6. And one of these guys made a comment to me like, oh, no one uses Snapchat anymore.
Okay, make the case for Snapchat.
Going back to the Facebook, I said, you know what, 180 million users for what you got. And if you look at what it's trading at per daily active user compared to Facebook, it's extremely cheap. Can somebody just come in there and turn the company around or make a strong partnership? The news keeps on getting negative on Snapchat. If you have kids that use Snapchat, or you'll know how much they actually do use Snapchat.
Thinking no one? 180 million daily active users? And if you have a kid, your kid uses Snapchat. It's so funny because if I just said, you know what, Carson, I'm not going to do this job. And if 6-7 years ago, I just observed the way my family lived and said, oh, I'm going to go buy Apple. I'm going to go buy Amazon. And I'm going to go, these are the things I'm going to buy. I don't care about the valuations. If I said to everyone, what can't we live without? Everybody go. And my little kid would say, Chipotle. Done. Chipotle. You? Netflix. Done. You? My daughter would say, Snapchat, Facebook, Instagram. Good. You? Oh, and if I just said that, took my whole family and said, give me one company we all can't live without, and bought them all and did it to a thing, it would have outdone anything. How crazy is that?
Well, you said to me a couple of years ago when I saw you, and it's actually just a hilarious comment, but it was a really keen observation. You said that everything that's new and cool just has this crazy multiple. So you said, imagine if you took this market and you went back in time and somebody just invented the toilet. What kind of valuation would the toilet company command in today's markets?
First of all, how about this? The TAM would be every asshole in the world. I just want to see that in the report.
And then some, yes.
Visit Zer0es TV to watch the rest of this interview, as well as more great short-selling content.